Thank you, Madam Chair. And, just a general comment. I'm shocked that anything would be sensationalized out of Washington or out of Hollywood. So I'm sure that is news to everybody. But I got a general question, and I appreciate it. And I got to tell you, I have one of the utmost respect for my friend from Missouri here and his knowledge and background in it. And I struggle to find anything even more intelligent or as intelligent to ask, but it seems to me he's right as we're heading down this path of trying to make sure this never happens again. I'm curious if either of you believe that the notion, just the notion of too big to fail, has really been driven out of the marketplace.
Well, not yet. Certainly, to date, the largest financial firms do have something of an uplift, it's called in credit rating parlance, for the fact that they have this expected potential future government support. As I mentioned earlier in my testimony or in response to questions, the credit rating agencies have told me that it's not based upon any statutory authority today, because they agree that the statutory authority to provide a bailout doesn't exist today. They're concerned about, their only concern is, well, what could happen under a future law adopted by a future Congress in a crisis. That's why I think it's critical that we move forward aggressively to try to provide that simplification and to provide a more resilient and stable financial system through higher capital and other measures.
Mr. Romero?
Absolutely not. I mean, these large firms are definitely still too big to fail. They enjoy all the competitive advantages, the enhanced credit ratings by Standard & Poor and by Moody, cheaper access to credit that doesn't take into account all the risks, the ability to raise capital. These are all things that they currently enjoy, and also there is a reduced market discipline.
Isn't that somewhat what you counter to what you were saying earlier?
No, I believe it's the same thing. I'm saying the enactment of Dodd-Frank itself did not change too big to fail.
Okay. And it seems to me, I mean, this was brought up earlier by our colleagues on the side that's now empty, but that in many ways the unknown is worse than the known. And this might be a case of the devil you know is better than the devil you don't know, and we're talking about SIFI and these systemically significant institutions. But I had recently, as a freshman, I'm a freshman on this committee, wasn't here for those debates. I'm sorry that my friend from Illinois got duped twice to voting for this, and as he was pointing out in his diatribe, I mean, it wasn't a diatribe, close to almost a question, that somehow or another, this was driven by people who love big banks and who love Wall Street. I had a visit up to Wall Street while I was here with a couple of other freshmen. We sat down and had a meeting with a CEO and a CFO from one of those major banks, not one of the 9, but a major bank. And they looked at us, and one of the statements was, Congressman, if we ever find ourselves in this situation again, you simply are going to have to do the bailout again. At which point I said, no disrespect, but I'm curious, where do you live? Well, the answer was Westchester, of course. Said, do you know anybody, have any of your friends or neighbors actually lost their job, much less their home, over what had happened? And the CFO kind of paused, and she kind of looked up at the ceiling for a second, and she said, well, honestly, no, I can't. I said, here's the problem. From Zeeland, Michigan, I can. I know people. My family's involved in construction, all right? It has been a very, very difficult time, and those ripple effects that my friend from Missouri is talking about are huge. And I am concerned. I mean, Moody's made note of this a year ago, that this language was out there. I think part of the problem is the American people and the marketplace, and I'm more concerned about, frankly, the American people than I am the marketplace, don't believe our actions match our words here. So I'm sure my friend from Illinois, who never dreamed he'd be coming here to bail out Wall Street, but ended up doing it twice, has every good intention. But this institution does not have a good track record, regardless of party label, of making sure that our friends back home in those small community banks and in those credit unions and in those other areas that are trying to provide that credit for those, whether it's rural or suburban or even urban areas, that we don't have a very good track record of following our own words. And it seems to me that that is a crucial element here, that we do not have the markets that actually believe what we have been saying that we are doing. And it seems to me, and Madam Chair, I appreciate you doing this hearing to underscore that and reiterate that for us. Thank you.
Thank you. Mr. Grimm, 5 minutes.